We got the coffee. We're ready to go. What's going on, traders? Welcome back to another trade breakdown. So today I want to share with you guys a very simple US 100 trading strategy that managed to provide these fantastic opportunities just at the very end of July. So there's a very simple, straightforward strategy on indices. With indices, you can keep it very simple, but if you try to transfer this over to something like FX, it won't work as well. So let's jump straight on the charts and show you guys these fantastic opportunities. So here we have US 100. And the first thing you want to do is understand what trend are we in, and you want to wait until we're in that very clean trend, because there will be times with US 100 where it's just a little bit messy. The current price action right here, right now, is also a little bit messy. So I'm not looking for anything just yet. You want to wait till the market is nice and trending. And as you guys can see here, US 100 has started this very clean uptrend, and all we're looking to do is play these continuation moves back to the upside. So very simply, just on the hourly time frame, we're just simply looking for broken levels of support and resistance where we want price to come back and test before then getting involved with the position. So it's very simple. The simple elements are you find a significant high and a significant level of resistance where price is broken, and all you do is you wait for price to come back down and tag it in. And also another part of this plan is the liquidity grab. So 9 times out of 10, what you will see is a lot of times, and this is the reason I don't trade double bottoms, I don't really trade support and resistance like most retail traders. A lot of the time, what you'll see price create a level of support. We've got 1, 2, every retail trader goes long here, they put their stops just down here, price comes down, liquidates them, and then we have the real move. And a lot of traders will see this. A lot of traders will see this nice bounce up. They'll probably try to go long here. They'll put their stops just below their support, looking for this big play up. And what happens? They get stopped out, and then the real moves happen. So very simple elements to this. It's just finding a level of untested support and resistance right below a previous low. Okay, so right here, as you guys can see, we have this level here. And what do we do here? What do we have here? We have a low that hasn't quite yet been taken out. And if we just replay this quickly, and we draw it like what most retail traders are seeing. What do most retail traders do? Like I just mentioned, support. They see this nice reaction, they look to go long, and they put their stop loss just below the low. And now what do we know is sitting below here? We know there's liquidity sitting below here, and we also know there's a previous untested level sitting just down here below. So retails go long here, they put their stops below the low. Let's see what happens. Bam, retail traders get absolutely stopped out, and that is then where you want to look to get involved. And so if we just replay to where the actual position was, did I hide it or did I delete it? I deleted it. Okay, no problem. Well, that's where retails go long. Retails go long here. They put their stops just below here, and you want to be entering right off the untested level just up here. All of it is one big zone, so you can look to set your order at the top, or you can set it somewhere in between as well. It doesn't really matter. You're not trying to squeeze out the biggest risk to reward all the time. I've seen so many people on Instagram and YouTube these days trying to squeeze out the biggest risk to reward so they can pass their challenge in one trade. Stop being so greedy with your trade and stop being so greedy with your stop loss. Otherwise, you're just going to take unnecessary losses all the time, and you're always going to be looking for that home run. Trading isn't about trying to hit the home run, okay? You want to take what the market gives you, okay? Now, look at this. Price snipes this level. We take out this low. We retest this level of resistance, come back down, confirm it's support. You go along there. You put your stops just below this low, and you have a beautiful continuation back to the upside. So that was position number 1, 5.4%. You trail your stops. You put it just below here. You get taken out somewhere around here. So 5.5%, either or. Fantastic. And there was actually another beautiful entry here as well. I didn't take this one because what I wanted to see was more of a liquidity grab. So I wanted to see this little retest and then see price come back down, test it again, create this false support, bounce up, and then I wanted to see a liquidity grab before then getting involved. So we didn't have that. So that entry right there didn't fit the plan. However, this one did right here on a lower time frame. I'll just show it to you guys on the hourly. So look at this. We have resistance, broken. What do we need to do? We need to come back down and we need to test it as support. Now, what do we have here? We have here a lovely level of support here. Retails look to go long. They see this nice strong push. Maybe they get involved here. They put their stops just below the low. Look what happens. Price comes down, wicks them out. Boom, look at that. Incredible entry. I mean, if you trailed your stops here, you would have got stopped out 2.5, but I think I actually closed this one. Where's the original trade? Okay, it's gone, but it was close somewhere around here. I always want to go for a minimum of a 1 to 3 risk to reward. Anything less than that just kind of isn't really worth it for me. And you can approach it two of ways. You can trail your stops, or you can set a physical take profit. I personally don't really like to set a physical take profit, especially with indices, because price can just impulse massively. And if you set a physical take profit, then you're going to kick yourself when, for example, if you were going long here, you put your stops here, you set your physical take profit at 1 to 3. Well, you're going to kick yourself because look, price massively impulses and gives no reason for you to close your trade too early. So you can either set a physical take profit, or you can trail your stops just below the lows every time we move up. So we move up, we have a low, we move up again, we drag it to, let's say, somewhere below this low, we move up again, we drag it to somewhere below this low, and we get taken out for a 4.3 to 4.5% risk to reward, which is incredible in terms of a little intraday trade where it just takes 1, 2, 3, 4, 5, 6, 7 hours. You're in and you're out, 380 pips, 4.3 risk to reward. Absolutely incredible. And look, there is going to be times where this isn't going to trigger you in. You could have also had this level drawn here. We had this support. You could have thought price was going to come down, take it out and tap into here. Didn't trigger, no problem. You then move on and then you draw the next one. Price triggers, fantastic. And then so on, so on. Your job as a trader is to react to what you're seeing and to not try to predict too much. I see so many traders trying to predict the market, trying to forecast all the time. Simply react, okay? If you think price is going to come down and test this level, but we impulse up and we have a new level and we break that, you trade off this one. You don't trade this one just because you think it's going to come down and you're going to retest that. You trade the current one and you trade exactly what you're seeing. We see a level of resistance. We see that broken. We see that come down and we see that tested as support. That is where you want to get involved in your long position, regardless if you think it's going to come all the way back down here. Eliminate what you think and trade exactly what you see. If we got stopped out of this position and it did come down to test this level, no problem. I will re-enter here and get involved back within the markets and catch an even bigger position. But what you don't want to do is you don't want to predict. Your job is to react. So there is two lovely positions, simply just trading broken levels of support and resistance along with retail traps. And there you go, you've just banked 4, 3, 7% in a matter of just over 2 days. Little intraday positions, absolutely fantastic. And what you do with these, you can either set alerts or you can set orders depending on how often you can be on the charts. If you work a job, then you might want to set an order. If you can be in front of the charts, then you might want to set an alert, and then you can look to assess price action once it gets down into that region. But there'll be times like this where if you do set the alert and not the order, it will impulse very, very quick. However, look, there's another entry, look, where price came back down. You could have got involved there and put your stop just below that stop hunt and still pulled out a fantastic risk to reward. Key takeaways: breaks and retests of support and resistance along with retail traps, and you will be able to start banking fantastic trades like this on US100, US500 and US30. Personally, I don't like to adapt this into FX because FX is a lot more manipulative than this. However, with indices, it moves really, really nice. So keeping it short and sweet, that's it wrapped up. Hope you guys enjoy this quick market breakdown. I'll be doing these every single month. So if you did enjoy this, please leave a like, comment, subscribe, all that good stuff. And I will catch you guys in the next one. Peace.